selling off today as investors grow more concerned about a slowing economy. The Dow and S&P 500 turning the worst session of the year so far. Joining us now is Tom Lee from Fundstrat Global Advisors. He's also a CNBC contributor. And Tom, it is great to have you on a day like today where the major averages are not only lower on the day, they're lower on the week. And the Dow, the S&P, and the Nasdaq are now also lower on for the month of February so far. We teased it.
So what does that mean? Basically, the market fell Friday and sold off, but sold off a good amount where they're basically saying that it's low for the week. I think SPY closed out at 599. You know what I mean? So overall, that is very, especially when SPY was trading at 612. Okay, so that's basically what they're talking about.
Ahead of this conversation, the fact that you're seeing a contrarian bullish signal here, what is it?
Well, it's a couple things, but I'd say what really stands out to us is that the market has eluded extended periods of weakness because investors are bearish at the highs at a time when there's record cash on the sidelines. So to us, this is a market that is very skeptical of these new highs. That bearishness and concerns about tariffs means there's a wall of worry. So I think this is actually a very positive setup.
And I agree with what he's about to say. I did cut him off beforehand, but I do agree that the market is pretty much safe in the sense of this is going to be the best time to invest. You know, you buy high, well, buy low because it's sitting pretty low, and you'll be able to sell high. So it's really a buying opportunity, in my opinion. But, you know, let's see what you guys think.
Set up for stocks.
So you're not concerned about some of the data we've gotten? I mean, that University of Michigan consumer sentiment reading this morning in particular seems to have spooked investors, given the fact that it cited broad declines across age, income, wealth groups. It also said that big spike in year-ahead inflation expectations. That was unchanged, but the 5-year expectations moved higher too. At what point does that start to manifest into something more meaningful in terms of a slowdown here in growth?
Well, these inflation expectation surveys matter to the Fed because they're concerned about whether or not consumers are actually raising their inflation expectations, and that would in fact be bad. But we have to keep in mind the UMich surveys do seem to be polluted by political affiliation. When you break down respondents by Democratic responses, they've gone from seeing inflation under 2% before the election to over 5% today. Republican respondents have gone from 4% to basically zero. In fact, if you look at the distribution of responses for those Democratic respondents, almost 7% think inflation is currently at 25%. So I think that there is a lot of pollution in that data, and I think it's probably pretty typical what happens when there is a change in administration, but I hope the Fed is aware of that political dynamic.
So, Tom, if I recall, in Q4 last year, you were warning about market turbulence, and we've been right now at around S&P 6,000. We're at the level where we were a month ago, a month before that, a month before that in late November. Should we also expect turbulence at these levels at this point, given that the macro narrative and the political landscape is still unclear?
It certainly seems like it. I mean, I think investors can cite a lot of things top of mind why short term they're expecting the turbulence. You know, we're coming off 2 back-to-back 20% years. We know there's significant uncertainty about tariffs. In our latest client survey, 63% of our clients, and that's over almost 2,000 respondents, said tariffs or deportations is the biggest risk. That's up from 54% last month. But these are not things that have necessarily long-term negative effects. In fact, things like the number of Fed cuts is actually back towards 2. And I think there's a possibility the Fed may actually make cuts sooner. I think one thing the market is being complacent on is thinking the Fed's on hold. But if this turbulence causes hiring to slow, I actually think the Fed could actually be making cuts a lot sooner, which would be positive for stocks.
Okay, so tell me about these granny.
So he said it right there. This would be a good thing for stocks if the Feds do cut basically quicker. So if you are in the stock market, shit, if you're in crypto, anything tradable, look for it to have a nice little pop in the future. I'll let him finish.
Shots that you've got, part of your investing strategy, some specific stocks, especially since growthy stocks seem to be especially vulnerable on days like today. And if we're going to get more volatility, it sounds like we might get more days like today.
Yeah, that's possible. But investors really want to own stocks
So basically,
that actually have structural advantages, and that's best evidenced by revenue.
Worst month this month for the month of February. That's basically all they're talking about, is that we've had the worst month in February, and will the stock market be able to recover for March, April, and time to come? Well, we'll see. I'll let it finish, and then we'll get into what's planned for next week. Well, this week.
Revenue growth, margin expansion, earnings growth, and reasonable prices. So the reason growth stocks will still outperform is that in a period like this, if we have macro uncertainty, they're going to be names with some visibility. It's not pleasant to own a growth stock today, but we know the lesson of 2025 is that these pullbacks have not been deep and investors have been buying these dips. So I don't think today is any different. In fact, it's no different than the DeepSeek panic or the tariff day panic or the CPI panic. So, I think this is going to be a buying opportunity.
All right. So basically, he said it. He thinks it's going to be a buying opportunity. Now let's prepare for the week and see what's gonna, what's to come. All right. It's loading up for you guys. So let's wait until it loads up. A little bit of technical difficulty. Don't know why. All right, it is coming. All right, so we already watched the video. We see that basically they're saying that the market had its worst month for February, which, if you were in the stock market, even the crypto market, you definitely got hammered unless you knew to play to the downside. Most people understand if something is falling, you play that it's falling. If it's going up, you play that it's going up. So let's talk about what's going to happen this week, the last week of February, technically. So the first thing that we have happening is we're going to have home sales data that's going to come out. Now that home sales data is for January. So every time that we get data, it's always the month behind, you know what I mean? But it's going to affect the market in some manner. So already off the bat, Monday, we're already playing with turbulence, which is fine. You know, we'll find opportunities. Next, we have goods and order report. This, I'm not going to say doesn't really affect the market, but we may have, you know, either a continuation of whatever Monday does. And then our next, on Wednesday, we have GDP. GDP is going to be held live. So I will be streaming that, I think, providing I can find the link sooner than later. I will be streaming that live. We also have our home activity. So basically the market sales for the activity will also be on Wednesday. Thursday, we have PCE. PCE does affect the market, so tread lightly. But we also have our weekly jobless claims. So already Monday, Tuesday, Wednesday, Thursday, we have something that's going to affect the market. Friday, we have manufacturing PMI. So basically all week we have data that's coming out. Pretty much all week there's going to be data. On top of all of this data, we have earnings. So we have major things that could affect the market. You know, Domino's reports on Monday, Zoom reports on Monday, Tuesday, Home Depot reports. Wednesday, we have Lowe's, NVIDIA. Everyone loves NVIDIA. Thursday, we have Dow. So we have a lot of things that are going to affect the market. If you don't have to trade, don't trade. If you feel the need to trade, because we all have that FOMO, then take a trade, but trade lighter than you would normally. So if you are going to get, you normally get 5 positions, only take 1 position. So you're lessening your exposure of the capital that you have out. So if it loses, it loses, and it's not a big deal to your account, or just don't trade at all. I have not decided what I'm going to do, but we are going to look at a few things that are setting up. All right. So let's look at the charts. Trading view. One second. Now, you guys already know the rules. When we're looking at these charts, we're looking at them with no bias. So right now, obviously, I know that SPY had a rough day Friday. Anyone that was trading SPY could have capitalized big time on puts. It was just a bloody day. One of the reasons why I choose not to trade on Fridays, just because I may be bullish, and to be honest, I was bullish with SPY all week, and now I'm starting to question it by looking at the charts. So I definitely, and the chart is still loading for you guys. We have key levels. We have key levels that SPY has touched, retested, and is basically sitting at. But, you know, SPY is SPY in the sense of, look at the chart. The chart is basically a cliff. So we need to be definitely looking at puts. I think that we definitely have another week of downside. And the perfect put that I picked would be the SPY 580 puts for March 21st. It gives a lot of time where Delta is not going to eat you up. But I mean, look at that last candle. This last candle is pretty much facing downwards, which is telling us like, hey, if it breaks this candle's low, then it's going to fall down even more. And so what do I mean by that? I'm going to put a line right what I'm talking about. If SPY opens up on Monday and breaks this low, it's safe to say that SPY is coming down to one of these supports. So that's just making trading easy. You're not thinking about what everyone else is doing, or it's just simple. If it breaks this white line, it's coming down to this green line. So because of that, I feel that I'm going to be setting up for SPY puts for March 21st, 580 puts. So that's what I got for SPY. All right, let's move on to the Qs. Qs, I don't have any plays for Qs, but Qs is pretty much the same setup as SPY. If it breaks this Friday's low, look to play it lower. Breaks Friday's low, look to play lower. All right. And, you know, like I said, it's simple. Don't overcomplicate your trading. You know, and I'm just going to spread it out so you can see what I mean by it's low. So I'm going to line this line up with the bottom of the candle. It doesn't matter if it's a wick. It doesn't matter if it's a base, but I'm just going to line it up with it. Line it up. If it breaks this Monday, and what I mean by break, because everyone always asks that, basically the candle needs to be trading down where that arrow is. So if the candle is trading down here, I'm going to continue to play puts to maybe here, and I'll put an arrow there to about there, which is a good ratio. I'm playing it down to the next support. So that's all this means. The break of the day previous, which would be Friday, breakdown, we play down. Okay, so that is Qs. All right, now let's get into main plays. First one that we have is going to be NU. NU $14 calls for July 18th. Yes, I'm saying calls, even though it looks like it's falling. That's the reason why I'm picking July. So basically, in a nutshell, you could allow this to do whatever it's going to do for the rest of the week, but its bottom should be this green line. And this green line is 1018. So how I would play this is let it hit 1018. I'm buying calls once it hits 1018. Okay, so you can basically sit and watch until it hits 1018. And once it hits 1018, now I'm going for $14 calls. Why am I saying 1018? Because this is a clear bottom, meaning they're not going to let it, for the most part, trade lower than this. Okay, now NU did have bad earnings, but their earnings are past them because their earnings happened on the 20th. So earnings are a little still fresh, and that's why we could get that flush down to 1018. Okay. Next, we have UPST. UPST is a weekly contract, so play with caution on that contract. We are looking at $90 calls for February 28th. Like I said, these ones are very, very risky. And they're risky because you only really have, once Monday's market opens, you only have 4 days of time for these to play out. If it was me, and being that it's a weekly, I would be playing these Thursday into Friday, meaning I'm going to swing them into Friday. Buy them at the cheapest, lowest price, whether they're 20 cents, 15 cents, whatever. And then if it gets a pop on Friday and they double my money, I take my profit, and it's a win-win situation. Next, we have CCI. CCI, $95 calls for April 17th. This one is pretty simple, but this shows the example of what I was saying for NU. Remember, I said that NU is going to bounce down at the 1018 mark and then should flush back up. This is pretty much forming that situation. So this is what it should look like when you're heading into NU. Now, I have a red line and a green line. If you guys pause the video, you're able to put those levels in so that you could see them for yourself on your own chart. Next, we have SE. SE, we are looking at $150 calls for September 19th. This stock is sitting at $127. So a lot of time on this stock. Next, we have Bitcoin Trust. So IBIT. We're looking at $59 calls for April 17th. A lot of time on this, and I mean, it's Bitcoin. Like I said, I believe that we're going to expect one more pop before the bear market comes in on Bitcoin. So it would just, you know, be good practice, I guess. But this is a good one. I like it. Next, we have the Dow Jones. So we have DIA. And it's loading or not. Okay, I must not have a play for that one because it's damn sure not loading up. So we're just gonna move on. Next, we have CRDO. CRDO, $100 calls for March 21st. Next, we have GRAB, $5.50 calls for July 18th. A lot of time. They had very good earnings, so we should be seeing an earnings surge to the upside, being that the earnings were good. Next is going to be DVN. DVN, $42, well, $42.50 calls for September 19th. Now, this one, I would look to buy after they give their dividend, because usually assets always fall down once the dividend is given out, and then people buy it back up because people sell when they're on the books. That's usually how that works. And their dividend date is going to be March 14th. So look to buy this after March 14th. It should be a pretty good play to snatch up, because then people are going to buy into it more. Oh, this chart is ugly. Next, we have QCOM. $195 calls for September 19th. This one, do not look to buy it until it comes down to 149. 149 would be the buying point for QCOM. The same contracts, but 149. So you buy at the green line. Next, Carvana. We are looking at 370 calls for August 15th. This one is pretty interesting because it's falling just like how SPY and Qs are. I don't think it's going to fall all the way down to this 97 mark. That would just be $100. That would just be outrageous. It would be one to keep on watch, you know. Maybe a drop down to 129.93, I would say, which would be about here. But that $100 mark, that just seems a little outrageous. Yeah, it definitely seems outrageous. I would say first target would be a drop down here, which would be 175. 175, bounce back up. So something like this, come down and then go back up. But that's all I can see happening. I don't foresee this flushing. You know, we're talking flushing all the way down here. That's flushing a bunch of levels. So I don't like that. I'm going to say my first level is going to be the 175.92. Definitely for a flush down. And our last one of the day. Ooh. Let's see when they have earnings. They have earnings Monday. And you know me, I'm big on not playing earnings. I'm going to give this play, but I'm going to say how you probably should play it. Okay. So it's Riot calls is what we're looking at. So being that they have earnings this Monday, so tomorrow, it's too late now. You don't want to buy those contracts because the contracts are going to get theta burned. You know what I mean? They're going to be, even though there's more time on them, they're going to get flushed out, and it's just not going to work. They'll be decayed. They'll die. Okay. So we don't want our contracts to be basically worthless. So what we're going to do is we're going to basically play the earning reaction. So if they have good earnings, we're going to see something happen like this. Now follow these blue lines. We're going to see something boom, boom. Okay. So that's going to be a good earning situation. It retraces back, sucks people in, and then it takes off because it had really, really good earnings. Okay. That's our first scenario. Our second scenario is going to be it has terrible earnings and it comes down here. Okay. So either down or up. What we're waiting for is to see what the earning report says. So is the earning report good or bad? If the earnings is a good situation, look for it to pull back a bit. And we're going to say to about here and then shoot up. So when are we looking to buy in on this? We want to buy it when it comes down. So look to buy around $9 after earning reports. Now, I don't know when they report, if they report before market or after market. I'm not quite sure. I actually didn't even see them on the earnings calendar as something of importance. So clearly not on my radar. But if it does have good earnings, look for the $15 calls for June 20th. All right. So that is my stock picks of the week. Also, you know what I mean? We gave the news of what's happening. We will be going live for the GDP, and anything that is live with Powell this week, we will also be going shooting that live. So just pay attention, put your notifications on, hit the like button, hit the subscribe button so that you are up to date with anything that comes out for Queen of Trades. All right, guys, have a good rest of your day. Enjoy.